Okay, cool. So each of you come from different parts of the world. We have Thailand, we have Silicon Valley, but investing in Southeast Asia. We have Singapore, Southeast Asia. We have Russia. And now all of you are super interested in Southeast Asia as a market. But before we go into the landscape in Southeast Asia, I wanted each of you to maybe talk a bit about your fund. As a lot of people here are maybe like starting out their startups and they're maybe thinking about raising capital. And these are usually some of the typical questions as an entrepreneur I would ask the VC, right? I would, for example, ask, what's your investment thesis? What sectors or industries do you guys invest in? Which geography? Because some people only invest in Indonesia, for example, right? So where do you invest in? What stage, what level do you invest in? Or what is your average check size? And then what is your overall fund size as well? And how can you add value to me as an entrepreneur? So we'll start with Araya. Maybe a couple of minutes each.
That's a long set of questions. So Arden Capital, we have two sides of the business. We have Arden Labs, where we actually have an idea. It's like more like opposite of incubator type. We have an idea, we find the right people to run it, and then we seed them until they go raise Series A. As for Arden Ventures, it's just the typical venture capital where we invest in seed to early stage and doing some Series A as well. Our typical target size, ticket size is around 200,000 to 500 USD. And our main focus is Southeast Asia plus Hong Kong. We only focus in e-commerce and e-commerce enabler, but our definition of e-commerce is very broad. Can start from like logistic fulfillment to demand generation, B2C, C2C, payment gateway, or even into like fintech industry where like merchant enabler, merchant lending, or invoice factoring.
Cool, thank you.
Yep.
Hi, so again, Kyle Kling, Fenox Venture Capital is an international VC. We're based, our headquarters in the United States. As you mentioned, we have 8 international offices, about 8 different funds. Our interest in Southeast Asia, our investment focus is quite broad. We do mobile, internet, social, cloud, enterprise, health IT, fintech, next generation technology. So I'm happy to see any company from this region in any vertical. Right? Our check size and our investment criteria, we are typically right around early stage. We do seed, Series A, even we can sometimes dabble within the Series B space. We've done check sizes as small as 50,000 all the way up to a couple millions, even up to 10 million if need be. Right, where we add value, where we try to add value is being that we are an internationally global VC, we try to make sure that we can take companies to the next level, how we can expand, for example, out of Malaysia, across Southeast Asia, and even over to the US or Japan or Korea or other parts of the world. And to do that, we do that by partnering them with corporations. Typically, corporations are our LPs, the people that invest into us, and we try to find that strategic partnership from the very beginning, whether it's manufacturing expertise, whether it's this actual customers for you as entrepreneurs for your own product line. Right, and so Fenox is focusing in Southeast Asia more and more, and it's not just Indonesia. We have an office in Indonesia, but we investing all over Southeast Asia.
Cool, Vishal.
Yeah.
So, most of you are probably familiar with 500 startups for 2 of the things that we specialize in. The first is the VC arm of what we do, and we're an early stage investor, much like Phoenix. We invest in the seed stage, Series A stage, and sometimes we dabble in Series B stages as well. The average check size for Southeast Asia ranges from $50,000 all the way to $500,000. Those are mainly the checks that we write over here. The second part of the business that you would probably be familiar with is the accelerator program that we run out of Silicon Valley. And we've started one in Malaysia as well. I think it's called Distro Dojo, and it's happening right over here in the MaGIC Academy. Is that correct? Just upstairs on the 2nd floor.
MaGIC Accelerator Program.
MaGIC Accelerator Program, my bad. But what we also do is that we build startup ecosystems around the world. And all of this stuff, the venture capital, the investor education programs you run at Stanford University, the accelerator programs that we run, the government consulting that we've started doing, and an in-house M&A practice that we've just started as well. all as part of developing Silicon Valley-style startup ecosystems around the world. I'm going to talk a little bit about the Southeast Asia fund that we run. It's about a year and a half old, maybe a year and a quarter, a year and 3 months old. And we've invested in about, I'd say we're closing to 80 companies right now. We've invested quite diversely across the board. Some of the companies that we've invested in have first-time founders. Some of them are experienced entrepreneurs. They're usually companies that have developed or demonstrated some traction. That's usually when we get in. We don't usually invest in ideas. We don't usually invest where people haven't demonstrated some sort of customer interest in their products. And where we add value to companies is in the sheer level, in the sheer number of companies that we have in our portfolio. It's 1,200 right now. We bring a lot of experience because we are familiar with a lot of different verticals, and we help companies go to their next raise very quickly. Yeah, that's 500.
Dmitry?
Yes, my name is Dmitry. I run a fund which is called Frontier Ventures. We are a VC fund, $50 million VC fund that has a number of investments in Russia, in Southeast Asia, and also recently Australia as well. Our core team is now based in Singapore. We're focusing on Southeast Asia and Australia, but we can invest outside of this region as well. We usually invest from several $100,000 to a few million. A couple of companies we invested $5 or over $5 million. There are certain segments which we like. One big priority for us right now is in online service marketplaces. So we have 10 online service marketplaces in our portfolio, which we define as platforms that connect service providers and either consumers or businesses. So most recently, we invested in a Singapore-based company, Chope, which is, of course, a restaurant reservation company, which we also classify as a service marketplace, and an Australian company, which is a platform for high-end consulting services. Where we can be helpful to companies we back is, first of all, we're entrepreneurs. My partner and I have built businesses ourselves. So we co-founded, for instance, a company called IVI, which is now the largest online video business in Russia with about 30 million users. But also in some segments, such as online service marketplaces, we do accumulate quite a bit of knowledge and experience across different markets and can be helpful to entrepreneurs building their businesses. Thank you.
Yeah. So I'm going to ask each of you some questions about your specific experience of fund. So starting with actually Dmitry, in terms of your experience, you've started companies in Russia and invested primarily in Russia and then and Europe, and now you're only starting to get into Southeast Asia. So as we all know, Europe is also a pretty fragmented market with lots of different countries. Although Russia has 143 million people, it's still relatively, people are not online yet, or maybe like not using as much online services. So similarly in Southeast Asia, what are some of the similarities and differences you're seeing in Europe versus Southeast Asia?
Yeah, so Russia and Europe are different. Russia is less fragmented. It's almost 150 million people with something like $25,000 of per capita income. So it's kind of a upper middle level income country, which is not that fragmented actually, because it's one language, it's the same legal system. So scaling stuff in Russia may be a little bit easier than some of the Western European markets when you have to do it across markets. Russia is, depending on which Southeast Asian market you compare it to, is a few years ahead. So we have a couple of companies that are in $5 to $10 billion market cap that are public, a few companies that are sort of in 500 million to a few $1 billion market cap, although that stuff obviously fluctuates. So it's a few years ahead in most of the segments, which is really helpful for us because some of the stuff that we've seen in the Russian market, we can directly apply the learning when we back and help companies in Southeast Asia. Europe is a little bit more like Southeast Asia. Obviously, it's more developed, but there are all sorts of issues in scaling across different markets. Sometimes it's quite difficult. So some of the stuff that we've seen in Europe, we can also see here in Southeast Asia as well.
Okay. And Vishal, so you mentioned just now that you guys invest in so many companies, and the Southeast Asian fund is only a year and a half, but you've done over 80 companies. So I guess the question here is like being an investor that invests in the earliest stages and with small amounts of capital, do you really get a lot of hands-on time to help the companies?
It is a tricky one.
Yeah, because early stage companies, that's what they need, right? They need a lot more help, especially in Southeast Asia. We need a lot of help to, just sort of gel a strategy together for the entire region.
It is. So I'm saying this cognizant of the fact that we have some founders that we've invested in over here in the audience who may not have been able to reach me over the last few days, but I'm going to say this anyway. We try and help all of our companies as much as we can, even after we've invested in them. And that follow-on support that we give all our companies is very much part of our investment strategy as well, and very much part of the value that we add. So, and my girlfriend, who's not very happy about this, will also tell you that I'm part of something like 70 different ongoing WhatsApp groups with each of the portfolio companies that we have that I'm pretty much always responding to, in addition to all of the work that I have to do. Kylie as well, we're all part of these groups, and we try and engage with our founders immediately in a very quick way. So we have available 24/7 through WhatsApp, Facebook, calls, messages, whatever it is, and we do receive messages on these platforms at any given time. It's difficult, and what we are trying to do to manage that is we're trying to scale our operations in Southeast Asia. So we're going to try and make a few new hires to make sure that we have someone who's dedicated to looking after founders' interests. We're working through it. They're teething problems. It's not an impossible thing to do. It's difficult, but we do help all the founders of the portfolio companies that we have in whatever way we can.
Yeah, so 500 startups invested in my company in the US, and I was also part of the accelerator program. And what I found helpful was the network, because you guys do invest in a lot of companies that sometimes it's not, I don't necessarily go to like Dave McClure for help directly, but because I have access to all the other founders in the network, that was a tremendous help to me. Do you see that happening enough here, like founders within the 500 family helping each other out?
It's starting. Bearing in mind that we're just a year old, we're seeing a lot of that happening, and that's what we're trying to do ourselves as well. So for many of the portfolio companies we are trying to introduce them to their counterparts in the US, companies that are doing similar businesses, or people who have had experience running similar companies in different jurisdictions, companies that have learned lessons from, founders that have learned lessons from running failed businesses in a similar area that our portfolio companies are operating in, and that seems to be working. I mean, even with the program that we're running right now over here with MaGIC, we have gotten a bunch of different companies at different levels of expertise and operating in different segments, all of whom are helping each other in distribution and growth hacking, along with our own 500 mentors as well. So we're trying to develop it. It is working. We are putting founders in touch with other founders, and the idea is to create a network and a community that's strong, just like the ones that we have in the US, in Southeast Asia as well.
It's so important to have that network. So moving on to Cal, so you mentioned you have 8 officers, but you're based in San Francisco, and your Southeast Asian office is in Indonesia, right? So tell us a bit more about that. You seem to be pretty big in Indonesia. Do you look at population size in terms of which country to be more active in Southeast Asia?
Yes, I mean, population is one attractive feature that really moves investors' eyes to one particular location, specifically Indonesia. Why? 4th largest country in the world, almost 260 million people, presents a large opportunity that could be capitalized on. And for such a large market, we wanted to open up our office there so we can understand the region itself. We have a team of 4 based in Conclave, co-working office space. And so we are there, and we particularly attracted to it, and the reason why we've opened the office there so we can understand it. But it doesn't necessarily mean Indonesia is the only place that we want to operate in. But if we hope to help, for example, Malaysian companies expand across Southeast Asia, understanding a unique and dynamic market like Indonesia, we have to be there.
Yeah.
Right.
So anything specific you're looking for?
Specifically looking for in Indonesia.
Or in Southeast Asia?
Southeast Asia.
Yeah.
Well, there isn't a particular focus because the majority of Again, in the background of a VC, we raise capital, and then we take that capital, we invest into startups. The capital that we raise is mostly from corporations. Corporations exist in a variety of different industries. This includes media, manufacturing, health, IT, fintech, the likes. And so what we try to do is to form those unique partnerships across every single industry vertical across Southeast Asia. And so there is the big focus is all of these industry verticals.
Okay. Yeah, because you've invested in hitchup.com, the first and largest Indonesian Muslim fashion e-commerce site.
Correct.
Right. So then in Malaysia, the equivalent is Fashion Valet. Have you looked at them?
I believe our team has come across them. And I think for us, we've approached Hijab and for the e-commerce play, primarily because if you're looking at an e-commerce play, really the size matters. And if we can tackle a larger market quicker, that would be more beneficial for our side.
So if we're, say, a Malaysian startup, and I mean, obviously the Malaysian market is a lot smaller with only 30 million people. If we start here, does that mean it's harder for us to get some seed funding? Do we have to launch in KL and, say, Jakarta at the same time to get your attention?
I think we just have to see a product that we can really, truly visualize growing across Southeast Asia. So a good example is, take Israel, right? Israel is a powerhouse when it comes into the startup ecosystem. Majority of the exits from most Israeli companies represents almost 10% of the exits that exist within the US. And so when you look at the companies that are coming out of Israel, they're very, very scalable, can exist across multiple markets. And it doesn't really matter how dynamic each market is. So the hard part about Southeast Asia as a whole is each country can be very unique. And there is some similarities, but growing a product across different countries, if we can see that there is a product that we can scale very, very simply, and we can make the right partnerships, then it's investing in a company in Malaysia, seed round, even though they're not based in Singapore or Thailand or Indonesia, is possible.
So being able to demonstrate the cross-border performance and execution. So Araya, so tell us more about the Arden Capital versus Arden Labs. You mentioned a little bit about that. I think most people here are not maybe familiar with the venture builder model. And you personally manage a couple in the labs and a couple in the capital. Can you talk a bit about that?
Yeah, sure. So Arden started out 3 years ago, from few founders who actually exited 3 companies before, who have built, like, for example, in Sogo, we sold to Living Social as well as at MaGIC. So they're more of a founders. And 3 years ago, admittedly, there were nothing here, right? I mean, in terms of like deal flows and the quality of deals and no conferences whatsoever. And they're more of builders. And we see that Southeast Asia, it's more of, don't really need rocket science or like great innovation. It's more like taking a proven business model and execute it really, really well here. And as you mentioned, like different markets have different types of culture and language barrier and everything else. So execution matters a lot. So we see that we have a lot of ideas that we can actually build that the Southeast Asia needs. So we started labs where we have an idea and then we hire a team of experienced founders to actually come and run it, or experienced entrepreneurs or experienced business person in each different sectors.
So e-commerce is an example.
Yeah, so e-commerce was actually the first one started, as well as MaGIC. And then we started a second labs in Jakarta. I think the labs model enables us to actually pull talent from a traditional sector who has like 10, 15 years experience and not ready yet to jump the boat and come into like a more risky startup without with having to like bootstrap since the beginning. But with the labs model, we're actually able to, for example, Snapcard, we just launched in Jakarta, we're able to attract a CEO who has 9 years experience in P&G, a few years in BCG, who's actually very experienced, and we can provide him with funding since the beginning. So that's the kind of the model that we see work well in Southeast Asia.
Yeah, I think even in Malaysia, I think there's Asia Ventures Group. I think Kai is here, which is also a venture builder, and they also built their own companies. And Happy Fresh and iMoney has come out of it. So moving on to sort of like the more general questions about like, you guys are getting pitched all the time by entrepreneurs, either through cold emails or a warm introduction from an entrepreneur you trust. What are you looking for? What matters to you when you take that first meeting? What do you really want to hear from the entrepreneur? Anyone can take the question. Like, is it team? Is it product? Is it market?
Those three. I mean, at the end of the day, what happens is when we get together at a meeting with our global team and decide whether or not to invest, we really have to have one good reason why we should be investing in the company. And if it's team is one, and we just have an outstanding team that no matter what they decide to build, we believe that they can just execute, then we're going to fund them.
So let's talk a bit more about
Sure.
that, because everyone here will have a team. Everyone has a product. Everyone claims to have a big market. So you say team is the most important thing?
Team is one of the most important things, especially at the earliest stages.
Okay, so how do you prove out your team? How do you prove your credibility as an entrepreneur? And maybe in the US, people have done maybe 5 companies, and I failed 3 and maybe succeeded in 2, or I failed 5 and I'm doing my 6th one. There's still something to say. A lot of people here are like, I just left consulting or finance and I'm doing my first company. So how do you then identify good entrepreneurs?
So the team portion stands out when, for example, they have already created a company before, right? If the CEO of Walmart or one of the former founders of Walmart, for example, decides he wants to build a startup one day and say, that's fantastic, you built Walmart, I believe that you could probably build anything if you really wanted to, right? Or the same exists with some of the most successful entrepreneurs today. And so the belief that they can already execute on a product and that they've done that before is what stands out on the team side.
Yeah.
If for those founders that haven't built or have that track record of building a company, come out of the non-traditional startup communities, the first time coming in, whether it's within consulting, investment banking, or they just came out of painting, for example, and they just decided to build a company, right? What matters then is the next 2 phases. It's the product itself and then the market size, and really the traction and the execution that they've already been able to do with the product that they're building and how they're tackling that market size.
Yeah.
That makes sense.
Yeah, but I always get questions from entrepreneurs, and they always ask me that too. Well, I have like 1,000 customers, and my product is launched, like I've launched a beta version 2 months ago. Is that good enough?
Depends on who you're talking to.
So then how do you evaluate? How do you guys actually evaluate, we always say traction over time. Is it growth, month-over-month growth? What is it that makes you go, interesting, let's catch up for another meeting, and then eventually I'm going to write a $500,000 check. What is it?
I think especially we invest in early stage companies, right? And the team matters a lot. Business model can pivot over time. If the team is good, then they will be able to pivot. But the key is to actually, like you can't expect us to invest after like 1 or 2 meetings or 1 pitch, right? So the key would be to actually like develop relationship with investors as well and show us progress over time if you're not like the ex-CEO of Walmart or something. So it's more like showing us progress as well.
Mm-hmm. So investors want to invest in progress. So that means entrepreneurs have to reach out to you guys really early on before they actually want to get an investment from you, because they have to build that relationship,
Yes.
right? So typically how long? Like, is it a month? Is it 3 months? 6 months?
So, I feel like I jump in too much. Feel free to
Dmitry, how about,
enlighten us.
let's hear from you. What do you think?
It's exciting.
I mean, it really depends. Again, if it's someone that we can sort of get a good read on, meaning that they're known in the community and we have common sort of colleagues and so on and can get reference and so on, the period can be a lot shorter. But generally speaking, we'd like to be in a relationship with an entrepreneur for at least weeks or months, ideally months, and watching them as they kind of develop their team, develop their product, and follow up. Like, if you promise something to show data, whatever, follow up. Another point that I wanted to make about teams specifically, in my view, there's a difference between more developed markets and emerging markets. So if you're in the US, which obviously has a very developed ecosystem, you can be a Zuckerberg who's 20 whatever years old, and you have this excellent idea, and then if you're sort of executing your core idea or technology well, you can have some other competent people around you and complement you. I think in emerging markets, it's much more challenging. So there are a lot of very kind of basic things that are not even there yet. So we tend to see people who are more mature being successful. It's not to discourage people who are young, but if you at least have a few years of experience at a startup or a traditional company, that's, in my view, really helpful. We also want to see people who can work with other co-founders. So someone who is able to get other highly talented and successful people to sort of rally around their idea or their business, that's a really good indication to us that you can actually build a team, because in the beginning, obviously, you can't promise them a lot of money, but you have to sell them your vision and you have to sell them yourself, so that's really, really helpful.
So that's really interesting. So young people, like fresh grads, like early 20s, right? So how many of you here are like early 20s? There's quite a few. So yeah, I think I agree that. I think on one hand, people are like, oh, let's invest in really young kids. I think we see that in the Valley a lot, where you're at Stanford and Peter Thiel are like funding these kids and getting them out of college. But you're saying that you prefer more mature entrepreneurs, like 40 years old, 30?
No, not necessarily. No.
30 years old?
I think that, and again, I'm making a distinction between emerging markets and developed markets. I think it's easier to be a very young entrepreneur in a place like the US, when the ecosystem is so mature that a lot of things can be solved easily if you just have a great idea. I think in emerging markets, if you're early 20s, I would encourage you to maybe, again, I mean, everyone's situation is different, and some of you might go on and create super successful businesses, but I think that the more sort of likely path to success is to first work for a few years in a more established team. That, by the way, can be a startup team, and in fact, actually, if building a startup is what you want to do, that's probably a more logical way. But I just don't see a lot of 20 years old building super successful businesses in emerging markets. It just doesn't, I don't know, do you see examples of that?
I tend to agree with that. I actually tell people that if I were them in Malaysia, and I'm in my early 20s and just graduated, I would actually go join a startup. Because I can learn from the mistakes that they make, perhaps, right? And then also going to a big corporation and have a perspective and expertise in some ways, because I think Araya mentioned earlier that working in a big corporation, you learn certain skills, some processes, some structure that when you do grow your startup in the future, you can apply those things. Versus if you don't have any experience and you just jump into a startup, then you don't know what you don't know.
And by the way, of course, everyone learns at their own pace, but in a startup, usually the learning curve is really, really steep, meaning that if you're in a strong team that's developing, it could be just a few years when you actually have learned enough to be able to kind of go on your own and do something. So you don't have to be we see some really talented people doing exciting stuff at 28 or 30 years old. So you don't have to be old to run a startup.
Yeah. You get pitches. What are some of the most common mistakes made by entrepreneurs when they're pitching you, or just in their decks that you see that you're like, I wish they knew better? What are some of these things?
Oh God, this could be a list. So not explaining. First of all, at a very, very basic level, just communication skills, right? So just communicating your proposition. Like if you're going to go to an investor, at least pitch to your friends or your colleagues or whatever several times, and then just ask them, did you get it? Like, did you understand what I'm trying to do? Because very often, just communicating your ideas tends to be a very, very difficult proposition, right? So explain your product, explain your market, explain how you're different from other people, explain what the traction is. Just a few very basic things that every investor will want to understand, and you need to really know them cold. You shouldn't be making this stuff up in the process of the pitch.
Okay, so articulating your vision.
I think when I was practicing as a lawyer, some of the best advice that my former boss gave me was that whatever you're writing and whatever you're trying to explain, you've got to phrase it in a way that makes it easy for an 8-year-old to comprehend. And that same logic should apply to your pitch decks. This does not mean talking to Dmitry as you would to an 8-year-old, or talking to any one of us as you would to an 8-year-old. But what it does mean is that things like what does your business do should be easily explained in a sentence or two, and we should get it. I'll give you a really good example of a pitch deck that was sent to us, and a founder who communicated exactly what was written in the pitch deck to us on the phone. I'll leave the name of the company out, and this is what it said. Slide 2, after slide 1 was the company's name, slide 2 was changing analytics for everyone. Slide 3, we change analytics by using big data. Slide 4, we change analytics by using big data and our own proprietary algorithms. Slide 5, a few traction stats. Slide 6, here's how much we're raising. Slide 7, what we're going to do with the money. And the slide 7 on what we're going to do with the money was divided into 50% HR and 50% marketing. And slide 8 was thank you. And they expected us to make a business decision based on these slides. Now, I know we're 500 and we invest in a lot of companies. And founders may get offended when even 500 said no to me. But we do expect something more than that. Communicate your ideas clearly. Tell us in one sentence what it is your business does. If an 8-year-old understands what you do and how you get money, you're on the right track. And second, tell us your impressive traction statistics. How many customers do you have? How fast are you growing those customers? How many click-throughs are you getting through? What's your revenue run rate? What's your monthly burn? Tell us those statistics because those things matter to us when we're making an investment decision. I think that's the best advice we can get. I can give.
And one small addition to that, I couldn't agree more, but one small addition to that, like forget the buzzwords, they're really annoying. Like if you can explain it in plain English, please do, because
like
the buzzwords is just when they're, especially when they're not
mobile.
meaningful. Yeah, like this is a great example of how not to pitch because it's just really super annoying.
Like Uber for oranges. What is that? What is that? We see so many businesses that now start with Uber for blah, but do nothing that's like Uber for that. No, it's not. It's not Uber for anything. You're not Uber for apples. You're not Uber for
professionals.
Food. Yeah, Tinder for professionals. Wait, what? You know, it's...
Anything from Cal and Araya?
Just real quick. I think one thing that we forget is pitching is kind of like learning a new instrument. You can't just walk up and play Beethoven on a piano the first time you touch a piano, right? It takes time. You're gonna have to practice. The best way to practice is first start off, call your mom and ask her and tell her what you do. And if she doesn't get it, then there's something wrong, right? Call your 8-year-old cousin. Try to convince him what big data analytics is, and if he doesn't get it, then try to make it dumb it down. Call those that understand what it means to, what is funding, and those who understand what is marketing, and those who understand how the operations of a business, and do they understand what it is clearly. So practice.
Yeah, and if you have an Asian parent who, after your pitch says, if after your pitch says, why aren't you becoming a doctor or a lawyer or an accountant? You know you're on the wrong track then.
But all parents say that. Okay, we have like 10 more minutes. Do you want to add something real quick?
Try to make your email short as well. We get tons of emails and investor. Like sometimes the emails body are just too long, and then the important messages are there, and like we couldn't finish reading everything. So try to make it very simple would be better.
Get to the point.
Yeah.
Yeah. So you guys all can invest in like bigger markets or elsewhere. Like 2 of you guys are Silicon Valley funds, and 1 of you is a Russian European fund, and Araya, you are obviously Thailand, so you're in Southeast Asia, you're fine. But what's exciting about Southeast Asia? Why, and more specifically, what are the opportunities in Southeast Asia that you see? Because we tend to see a lot of companies trying to copy business models from the US. I'm okay with that because I feel like then the business model risk is removed. Then you just need to customize and localize. But aside from that, like what are the big opportunities?
I'm biased, of course, because born and live here, right? But this year and last year, during this period, I see so many key trends are happening at the exact same time, right? I mean, that's why you guys are here as well. People are online, people are social, people are getting richer, and over 60% of population here are younger than 35. So that's something that, then the opportunity is just so big. For us, e-commerce, of course, we're still lower than like 1% of the total retail sales. So we see a lot of growth in that space. I don't know, I can go on and on about Southeast Asia, but
One of my colleagues from 500, I think, put it very well. He said that talent and opportunity are equally spread around the world. But what isn't is access to capital. And that's what we're coming in and providing over here in Southeast Asia. So we think that there are a lot of brilliant, driven people, and there's a lot of opportunity. There are untapped, unsaturated markets that exist. And you have an ability to get into deals over here cheap. And I don't mean that we're pillaging the company by investing at low valuations. What I mean is that it is more affordable to invest in Southeast Asia than it is in the US right now. And we have a lot of opportunity over here. And that's what's driving us to invest in Southeast Asia right now. We can provide access to capital. We can help create ecosystems that resemble Silicon Valley that do not exist over here as of yet. And we have the potential to develop players that are going to become huge across the region. And we don't have that same opportunity anymore, or it doesn't exist to the same level that it did exist in the US.
So are there some areas or some sectors where it's not a copycat model from, say, the US that you guys think is an opportunity, but people are not really looking at that?
I love to talk about this. So first of all, I think there's nothing wrong with sort of the copycat model. And it's been, I think, unfairly kind of dumbed down and sort of looked upon as sort of something that's a bad thing. Well, first of all, to effectively execute a business model that already exists and to tailor it to a specific market is a very, very intelligent job. It's very difficult to execute even a model that's already there, right? So I think that the entrepreneurs who are building business models that already exist outside of Southeast Asia, I think are doing an extremely valuable and great job, and we'd love to back them. Having said that, I think that in the next 10, 20 years, that's probably where most of the value of companies will be built in this region. There will be some companies that are doing something original, but again, it's just not such a non-obvious opportunity, because if you have 600 million people who basically need like some really basic services that haven't yet been built, I think that's kind of what you need to focus on. You can do some of the more original stuff, but given the fact that the ecosystem is not well developed, financing is not readily available, it's just a much less obvious opportunity. So in fact, you'd be kind of sailing, sort of trying to swim against the tide. And I would just encourage you to just do some basic stuff that hasn't yet been done.
So I used to think, having built companies in the US and all that, and in the US it's a lot easier for me to bootstrap my company from like a two-man garage and like build it up. But in Southeast Asia, I've noticed, because it's so fragmented and like entrepreneurs here need a whole lot of money to enter a couple of markets at the same time, and that's why you get venture builder models working pretty well here, or like companies just needing a lot of funding. Do you agree with that? In terms of like the amount of funding that's required for a fragmented market is way more.
Yes, but there is another element of it, which is the costs are so much lower in Southeast Asia, right? Try hiring a developer in Silicon Valley, you'll be, and not only would you pay, 10 times what you'd pay here, but you wouldn't get a very loyal workforce, right? So in fact, actually, I'm not sure I would agree with that.
I agree with what Dmitry said, and I would add to that most companies that are making regional plays, and this is most companies, do first try and develop sufficient traction in their home geography before expanding. So the costs of the regional play may be high, but that usually would come after they've gotten funding from a subsequent round. And they have that capital in the bank ready to roll out. And it is cheaper than making an expansion play in the US as well, because things are just a lot cheaper over here in Southeast Asia.
Yeah. So first try to tackle and dominate the local market, raise some maybe local VC money or seed money, and then grow regionally and raise it from a bigger
It's
VC.
not even dominating the local market. It's developing, it's showing that they have good traction in the local market, however you want to define that. Some traction in the local market, enough to show that there are customers who are interested, who are willing to pay, and they're growing pretty aggressively. It's a good time to expand regionally and have first movers advantage in those markets.
So just to kind of follow up on that, why are you doing that? And the reason why you're doing that, a couple of things. First, you develop a playbook on how you roll out in the market, right? And you can't, it's stupid to try to do it in two different markets at the same time, right? You need to like nail at least one. The second one is you show to guys like us that this is something that's credible, and you actually raise capital on the basis of having some success in one market, right? There are some very, very limited exceptions when you should consider launching in several markets, but I think that in most cases, especially if you're doing something that's not a copycat and something that's really new, you should really start with one market.
Yeah. Well, I just see two different ways of thinking. Like the Happy Fresh and the K-Fits have launched in a couple markets at the same time, but they have a lot of funding. And then the other companies who have less funding, maybe less access to funding, they'll have traction in one market first and then raise a bigger round to tackle other markets.
So the main risk is trying to scale something that doesn't yet work, right? So if you don't have product market fit and you're trying to scale it in several markets, essentially what you're going to be doing is you're going to be scaling up your losses, right? Now, there are some circumstances when you have enough confidence that you will have that product market fit for whatever reason. Either you've done this in a completely different market, or the model is just so super obvious that somebody has already demonstrated it, and it's just the chances of not having product market fit are very low. So there are some circumstances like that, but in general case, it's usually not a great idea.
And I think the other part of that is that yes, it's true that K-Fit and Happy Fresh executed their business models in that way by starting off with regional plays. But the question is, did they need to do that to scale the way that they have scaled? And I don't think that's necessarily true. They could have started in one and expanded quickly into others as well.
I think they wanted
but
higher
Kai
valuation.
disagrees.
And by the way, without naming any specific companies, just the fact that someone did it, time will tell whether this is a good idea or not. We're again, don't want to refer to any specific company, but there is a good chance that maybe some people are scaling up some models that don't yet work.
Maybe they have a good team, they have a track record, or they have funding, right? I think usually those are the cases, because I think in Happy Fresh and K-Fit, the founders did have track record and they're able to do that. Last question here. So I think there's a lot of questions, also, my question as well as in the crowd. With what's happening in China and Greece or Europe and markets crashing everywhere, it's a bit, scary. And then I'm getting some questions where it's like, oh, is this a good time to be an entrepreneur? Are VC funds drying up? If they invest in me in a seed round, will they be able to follow on? So can you address that concern or that question? Some people are thinking the global recession is coming.
Yeah. Yes, I think actually, I think now is the best time, better than ever, for Southeast Asia individuals to be raising capital and starting companies.
In the recession or upcoming recession.
So it depends on what you're referring to. I don't think truly, technology advancements for the general whole and actually building viable companies is recession-proof. I personally believe that. And so the two examples, and this is just from the U.S. perspective, why I think Southeast Asia right now is and the rationale for the statement is why is this now the best time actually. So first off, when we talk about the market crashes in the U.S., for example, here in the U.S. we have too much money. There's 500 VCs. You walk down the street and somebody will probably give you money if you have a good enough idea, right? because of the fact it's more product focused than anything. But what happens is when there's too much money, there's too much capital, it ends up being, from investor side, valuations start to skyrocket and don't make sense, and deals tend to be much more expensive. And there's capital out there that wants to support technology advancements no matter what. So the capital and the amount of VCs are actually starting to look this way, over to Southeast Asia, especially from the US side. Why? Because of the fact that what they're seeing here. And so, and just go numbers sake, right? Southeast Asia is, you have two times the population. You have 2 times the mobile subscribers. You have 2 times the internet usage, right? Since 2000, your internet users have grown 66 times, right? You're starting to see within the last 6 years for Southeast Asia alone, there's been 2.6 billion in acquisitions so far for this region. You're starting to see growth more than you could ever see in any other part of the world. And so the exciting part is that you have a market, you have industry, you have opportunities here that is just unreal to most investors' eyes. And I don't think that none of that has been tapped yet. And I think there's so much more that could be invested in this region. And I think that's why you're going to see more people coming here, more capital invested, and then more efforts to build the startup ecosystem.
So that's the bullish argument, which, by the way, I agree with. But I would add a note of caution. If we do have major turbulence in global financial markets, and of course, if we have major issues in China or US, they will at some point get to Southeast Asia. And when there is a big problem with valuations or recession at the macro level, eventually it trickles down to early stage stuff as well. So it is entirely possible that because of some global financial event, the availability of financing may decrease at some point. Now, that's still not a reason not to start a startup. In fact, actually, in those types of moments, it can be a very, very interesting opportunity for people, because when the availability of financing decreases, a few things happen. First of all, it's much easier to find people at reasonable compensation levels. It's much easier to acquire customers because nobody else is going to be bidding on the same keywords or whatever. So ability to build businesses in times of downturn is great, assuming you can get some financing, right? So the point is, if you guys have a great idea, go ahead and start, but try to raise some financing, because if things, if the market turns, it's going to be much more difficult.
I mean, it's a big crash, right? And a lot of investors are affected by it. Like the stock market lost $5 trillion. But I think that Southeast Asia is still early. I mean, everyone will be affected, but more towards later stage companies, where they're actually raising from more traditional investors that actually have exposure in public market as well.
PE,
yeah, private equity or fund management, asset management. So, and then they will definitely have to cut down their concentration risk in the riskiest asset, which is basically startup and VC money. But for us, early stage, I don't think we have been affected by that at all. But be cautious. I would recommend the startups to actually spend more time, start early on in terms of fundraising, because some investors might take more time to actually make decision investments, especially like later stage ones.
Because they're more careful.
Yeah.
Yeah.
Sometimes they want to wait and see first.
And they probably want to look more rigorously into the business model and whether or not your business can make money.
I think the funding that would typically dry up or you'll find less of is probably later stage funding. Earlier stage funding wouldn't be impacted that much. I think what's gonna fall a little is probably funding from angel investors, because as far as venture financing is concerned, the fund's already there. Money's committed to the fund, and venture capitalists are going to continue to spend that money. And you can find some of the best deals around in a recession. But what may dry up are angels who would have spent that check on this company, but now in a recession may consider a safer form of investment. That's one. And later stage financing, where you're getting in big checks from big institutional investors, private equity funds, buyouts, stuff like that. That's my take on it.
Yeah. All right. Well, just as the conversation is starting to get heated up, unfortunately, we've run out of time. But I guess the key summary and message here is that now is the best time to be an entrepreneur, as long as you build a real business with real business models that actually make money eventually, right? And when you're pitching these guys, make sure you're succinct and on the point, and preferably get a warm introduction by their portfolio companies, right? Well, give a round of applause to our wonderful panelists. Thank you so much.